local markets are responding?
Afternoon, and thank you so much for having me. Well, I think it's a wait and see approach at the moment. We all understand that it's a supply and demand game. But look, given the upgraded the S&P upgraded South Africa's long-term foreign currency rating from BB minus to BB, and I think it raised the local rating from BB to BB plus. Again, it's a very positive outlook. And the agency did also cited improved fiscal metrics and stronger government revenues and better performance for the state of power utility. And I think the upgrade also reflects reforms gaining traction through the SMP. Still some flex risk, high public debt and structural constraints. But look, I think we also have to appreciate the fact that we at least reached 16 rand something last week, Friday. It was a positive outlook at the end of the day, and it was inevitable. But like I said, it's a supply and demand game. It's just a matter of time. Maybe we can see something going on in this market. But yeah, I'm closely also looking at how the rand is performing. And rate cuts are also expected. So I think now it's a battle of the bulls and the bears.
And I can tell you that this is one of the times that I'm really, really proud to be South African and really seeing just how policymakers have responded to the current macroeconomic environment, that we are seeing green shoots there in the economy, and hopefully we can start seeing significant economic growth coming through. Well, MJ, let's get into the company news that came out of the JSE this morning. Lots to chew on there. We did get the Naspers and Process group of companies releasing their interim trading statements today. They reported growth in all their profit metrics, and in particular double-digit increase in their preferred measure, which is core headline earnings per share. Are we seeing more evidence of a solid growth trajectory here?
Absolutely. Look, I think what a time to be alive as a South African share investor. We saw that Naspers and Process expect a surge in profits for the 6 months to the 30th of September 2025. This is projecting a core headline earnings per share to rise between, I think, 20% or 25% or so, driven by growth in its e-commerce businesses as well. And it has taken, I think, a much of a good approach, given the fact that it's being hard for some companies locally. But I think also Naspers is also being active in the share repurchase program, signaling a strong confidence in its cash flows.
Yeah, it seems that they are doing everything right there. I remember there was a time when there was concern over their e-commerce business that is outside of Tencent, but really encouraging to see the significant profitability that is coming from that division. Well, let's take a look at Barloworld. It released its annual results today. We did have revenue and headline earnings per share deflating there, even when excluding that Russian business. Of course, you know the headwinds that they are experiencing there. But interestingly, we did see a surge in free cash flow, and actually the company reducing its debt quite significantly. What story is Barloworld leaving us here as it gets ready to leave the JSE?
Look, I think the results were kind of tricky, to be quite honest with you. I mean, the results for 12 months ended around September as well show a headline earnings per share down around 21% to 830 cents. Meanwhile, I think its takeover standby offer valued around 23 billion has been completed, with the shareholders accepting the offer in early November. And I think also it is always noteworthy to mention that the company's equipment division has unveiled a new rebuild sector. So I think it's a rebuild situation, what we are seeing now. And the initiative is to sharpen its supply chain and skills capability.
All right. Well, let's get into chicken and chew on those numbers there. Chicken producer Astral came out with its year-end results, and we saw double-digit increases from the top to the bottom line. Shareholders also smiling all the way to the bank, with the total dividend more than doubling. And we know that the chicken industry has gone through some troubled times. Has the cycle significantly turned here?
Well, we are approaching December, and I think this is a time where most of us are going to enjoy those chickens. But look, after I reported a result showing a revenue about 10% to a headline of EPS about 14%, they ended the year with 1 billion in cash. That's remarkable, and something that we also need to be proud of, given the fact that this is a company that not everybody is taking it as it should be, which they intend to use a strategic capital investment aimed at driving volume growth. And also, they also are more than double their dividend, signaling a management confidence in operations. So it's all green for Astra Foods.
And I'm sure we will be seeing a lot of chicken on those braai stands during the festive season and also in the dinner tables during Christmas as well. Let's go into the car industry. The second-hand car dealer We Buy Cars released annual results today. And it's quite interesting because these results come after a major plunge in the share price that we saw when they released their trading statement. Of course, we knew that there would be an increase in the financial metrics, but the question here has been how much of a slowdown in growth are we going to see when they release their results? So what is your assessment of what they've been able to produce?
Look, Zalathi, I had an interview with Palisa 2 weeks ago, and we were speaking about the downfall of around 14% that it had. Look, it was inevitable, and it's something like this, we always see it, but that doesn't mean that all doors are closed. The company posted the strong growth for the year, and the revenue rose for about 13% to 226 billion. And look, it's a core headline earnings, right? And it increased 15% to approximately 900 and something million. They also flagged the competitive pressure from the influx value of Chinese car brands in South Africa, but believe that over the long term, the effect will expand the used car market. And we know that right now, many of the South African consumers are finding it hard to afford brand new cars. And alternatively, they can look at second-hand cars. And look, everybody's looking at We Buy Car Holdings for them, to get a second-hand vehicle. Though a lot of people are questioning the reliability of buying a car there, but look, the numbers don't lie. Men lie, women lie, but the numbers will never lie. But it's just a matter of time. I think even next year, we are going to see a positive outlook coming from We Buy Cars.
Yeah, really, really interesting dynamics there with the new vehicle market, particularly with the Chinese cars, of course, experiencing pressure from that. Because, as a consumer, you'd rather buy a cheaper new vehicle than a second-hand car. But also quite interesting that they say in the long term that they expect this influx of new vehicles from China to actually filter into the used car market eventually, which should benefit We Buy Cars. All right, let's go into telecoms. MTN giving us a quarterly update for the group, saying that Nigeria and Ghana were star performers there, and quite a big milestone there with the customer base breaking the 300 million mark. Is MTN firmly on solid footing?
Well, I think so. When we look at the Q3 2025 update, we see that it shows that the group service revenue was up by 25% in constant currency, with Nigeria rising about 57%, Ghana 35%. But the data revenue was especially strong, up by around 40%, despite the solid growth. MTN, I think it remains exposed to currency and regularity risk across its African countries. And this has been an issue for quite some time, but I think they need a strategic approach on how they can confront the regulatory risk across its African operations.
All right. 91 releasing results, which I thought were good, but investors clearly not as optimistic as I am. They saw strong net inflows with a double-digit acceleration in assets under management. They highlight demand recovery for emerging markets and that they are already seeing the fruits of that merger with Sanlam Investments. What's your take on what they were able to produce and maybe what investors are potentially not happy about?
Well, 91's assets under management, AUM, rose for about 142 billion. And I think the increase is about 16% or so year to year. And I think, look, they shifted from a net outflows of 5.3 or so, and the prior period of a net inflows of 4.3 billion. I would want to say this, Zanati, that, look, given the fact that it's being difficult for most of these companies, one would appreciate what they had to achieve in a short space of time, given how hard it was. So, like, I'm also leaning on your side there's one thing to appreciate more than how people are skeptical about the growth. But look, it's better than nothing.
All right. Well, as we close off the conversation, MJ, of course, it is a big week in South Africa. We have B20 and G20. We are hosting world leaders on African soil. Anything that you are looking forward to there?
Look, I'll be keeping an eye mostly on how the rand will be performing. I think with hitting the strongest level in almost 3 years, that was signaling something there that, look, there's something that we need to look into before the year. And I think the improvement is supported by the income, also capital flows, and the rally in the South African equity market because it's favorable to the budget update, right? So I think on the trade weighted basis, the currency has strengthened around 2.7% since the start of the year. Key supporting factors, obviously, they will include the inflation target signals, which boost investor confidence, and the relatively better fiscal signals. Nevertheless, I think the South African rand remains vulnerable to the external shocks, the U.S. interest rate moves, global risk appetite, and the commodity price swings, which can reverse gains quickly. But I'll be keeping my eye on it. There's something to look into there. Maybe we might take some short positions on USD ZAR during the G20 summit.
All right. Well, thank you so much for your time and for your insights on what is currently moving investors' money. That was MJ Givens-Khasi, CEO of Traders Connect South Africa.